Jazakallah khair, Abdul Rahim Saab, for all the kind words. And in fact, he has highlighted the activities that Rehbar what should do, and alhamdulillah, some of them, when in the presentation, we will all know that, inshallah. And like what he pointed out, and what I also explained before, we should be part of whatever is happening around us and support everyone who's in this cause, inshallah. Now we are going to the Rehbar presentation, and I request the chairman of Rehbar, Brother Sherif. Brother Sherif Kottapurath is the chairman of Rehbar. He is also the ex-CTO of Sun Microsystems and CEO of Boss Eyebolt, to present Rehbar to us.
Assalamu alaikum wa rahmatullahi wa barakatuh. I'll try to quickly go through this presentation. I think we are running about 10 minutes late compared to our schedule. This is a rough landscape in India. What are the options that people have in terms of investing their money, as well as in terms of getting money for doing businesses. You have debt-based instruments, which are almost always involving interest, and hence not Sharia compliant. You'll see that there is one particular item which I've put in green here. That's basically a microcredit organization which does an interest-free. This thing is more of a charitable organization rather than a for-profit organization. In terms of trading and leasing, you have private lease, financial lease, which are predominantly available, which are again not Sharia compliant. We don't have any institutionalized forms of the remaining Islamic compliant trading and leasing options, even though Rehbar is getting into some of this, and you will see some deals where leasing is involved, in which Rehbar has participated. And in equity, like Dr. Sharik Nisar mentioned, there are a lot of options which are Sharia compliant in the equity, in the capital market. You have Taurus mutual funds, Tata Select Equity Fund in terms of share market. There are private wealth management people who will take your money and then invest it in various equity offerings. There are venture capital funds which can be Sharia compliant, and as mentioned again, Secura is one of those things. And you have the normal Islamic investments, which are Musharaka and Mudaraba, which are done on an individual basis right now between individuals, not in an institutionalized fashion, which are available for people to have a Sharia compliant investment, both in terms of investing your money as well as taking investment from others. There are certain problems which normal individuals will face. We will come to that when we present more about Rehbar. So you have a lot of investors who have money, and you have a lot of businesses which need money. Now, what is it that businesses are looking for? Businesses need funds for growth. They would prefer that their equity is not diluted. Instead of taking, if I'm running a business, I don't want, and let's say I want 10 lakh rupees, and I take 1 lakh rupee each from 10 different people. Now I suddenly have 10 partners to whom I have to answer for everything, which is going to be a big headache for me. I can probably manage 1 partner, 2 partners, but then the moment the number of partners becomes too large, that's a big management headache. And my interest in the company also goes down when my share of the company comes down. I want to be able to pay out on business performance, not a fixed payment on a monthly basis, because a fixed payment is always a Damocles sword which is hanging on top of my head. I don't know what's going to happen next month. So I would prefer, I don't mind paying out more when I'm doing well, but then I don't want to pay out more when I'm not doing well. Most businesses do not have the expertise to structure investments. Structuring investments, writing the contracts, doing things in the right way, making sure that you're Sharia compliant, making sure that you're compliant to the Indian legal system. It requires a lot of knowledge, it requires a lot of expertise, and most businesses will not have the expertise in-house to do that. As I mentioned, want to avoid the headache of managing too many investors. Businesses look for a long-term financing partner or an advisor. It is not that businesses need fund once and then they never need funds. A business which is doing well, wants to grow to one stage, establish itself, then grow to the next stage, for which it requires probably more funds. And there may be ups and downs in the market, during which it will require someone who can advise them and who can manage the funds for them. They obviously want Sharia compliant financing. Most of the people who come to us come because they want Sharia compliant financing. Now, what do investors need? They have money with them, but they don't know where to invest. They don't know whether the place that they're giving money to is a good investment, whether it is Sharia compliant investment, what is its long-term future, can I get the money back when I want, how much time do I need to get the money back? There are a lot of questions which come up in terms of investing. So liquidity, which is how fast can I get the money back if I have an emergency requirement? Will I get a reasonably consistent monthly return if I invest in this? How do I analyze an investment opportunity and see if this particular opportunity is a good opportunity to invest in, or should I give it a go by? How do I monitor investments? If I've invested in one business, maybe I can talk to that entrepreneur and then find out how it is doing. But if I want to reduce my risk and invest in, let's say, 5 different businesses, now how much spare time do I have to go and understand each of these businesses and see how this money is being spent, whether I'm getting the right kind of returns and so on? So the expertise to analyze investments is lacking in the majority of the investors. And monitoring of the investments on a monthly basis, which is one thing which Abdurrahim Sab mentioned. Again, I want a long-term investment partner advisor who will tell me if my requirements are like this, which are the kind of deals I should invest in and which are the kind of deals that I should avoid, what can I look forward to next year, and so on. And obviously, I want a Sharia compliant return. Now, the Rehbar model has different benefits to the businesses and different benefits to investors. Let's compare Rehbar model to other opportunities which are available, even though they may be Sharia non-compliant. One of the goals that we had when we set up Rehbar was that we should not look at this as an emotional issue or a pure religious issue. We should be able to offer some services which can compete with those people who don't have any restrictions in how the money can be employed and how the money can be utilized, and still be able to give returns equal to what they are able to do or give something even better than that. Because we believe that there is nothing in Islamic finance which should reduce the profit or which should hamper people in such a way that they will not be able to get the right kind of benefits which would have otherwise been there. Because this is a system which Allah subhanahu wa ta'ala has made for us, and I'm sure that we can do a good job using the system that Allah subhanahu wa ta'ala has given us and give just and good profit both to the entrepreneur as well as to the investor. Now, an entrepreneur has an option of taking debt. The burden is a fixed interest payment, which will sit heavy on the business. Whereas the benefit is there is no equity dilution, there is a lower cost of capital, because compared to the share that you have to give to someone who is investing in your business, you know that this is the amount that I need to give on a monthly basis. And most businesses obviously expect to make much more profit than what the interest that they're paying to the banks. They could go with equity, in which case it is a variable profit, so that's a burden which is off on them. But what is burdensome is equity dilution and a high cost of capital. And what does Rehbar offer? Rehbar offers a balanced system to the business where you have a variable monthly profit, there is no equity dilution, and it is Sharia compliant with a moderate cost of capital. Now, what options do investors have? So there are 3 common options which investors have. They could put the money in fixed deposit, which is low returns, and if the economy is doing well, they still don't get the benefit. If your inflation rate is more than what the fixed deposit is giving you, your money is actually losing value, even though the figure keeps getting bigger. The benefit is there's no fluctuation in return. You know exactly what you're getting in terms of rupee terms. You could invest in real estate. The problem is that you have very low liquidity and a high cost of maintenance and monitoring. The upside is, of course, that you have a potential for high returns when the real estate is booming. You also have a potential for losing money also in real estate. You could invest in stock market and commodity funds. You get typically you'll get higher profits, and it's very good liquidity. In about 4 or 5 days, you'll be able to get your money out. but the returns are highly volatile. Anyone who has seen the charts on share markets recently can see it like a roller coaster ride, mostly going down. And the factors beyond just business performance which impact the returns that you're getting. Something happens in China, your Indian stock market tanks, the Rehbar again offers a balanced system to the investor. They get to participate in the upside of a booming economy, gives healthy liquidity. You cannot get your money back in 4 or 5 days, but you could get your money back, depending on the kind of deal you have invested in, you could potentially get your money back in a month or 2 months or 3 months at least. Returns only depend on business performance. It doesn't depend on other extraneous factors. Now, how does the Rehbar operating model work? How does this happen? There are 3 parties involved in a transaction. One is a business, which require funds. Then there are investors who want to invest funds. And the Rehbar Financial Consultants basically is a mediator here. The first thing that happens is a business comes with an inquiry, saying that I want to expand my business, I want more working capital, I want to diversify into X, Y, Z. So once this kind of a inquiry comes, a due diligence is done by Rehbar on the business person, as well as on the business. So first thing is we go and find out more about the business person, check his references from people whom he has mentioned to us, as well as from his suppliers, from his customers, from other competitors and peers. So we go and get feedback on this person, how trustworthy is he, does he keep his word. Obviously these are feedback which could go wrong, but then we try to do our best in terms of finding out as much as possible about the business person that we are investing in. Then we look at the history of this business. How long has he been doing the business? What has been the rate of returns? How consistent has the profits been? And then we look at the business plan. What is it that he wants the money for? How is this money going to be deployed? How is this money going to earn him more? And then we do financial analysis, which is here is the way the profits will increase when this investment is made. And this is the extra profit that is expected if things go as per plan. And we also try to do an expected scenario, a worst case scenario, and a best case scenario. Obviously, again, these are predictions. Predictions can go wrong, but this is to the best of our ability. We do these kind of analysis and prediction in terms of what is expected from this money invested. On the basis of this due diligence, a report is prepared, which talks about the promoter, talks about the business, talks about the industry in which he is in or she is in. And then this is sent out to our database of investors. Currently, Rehbar has an investor database about 1,000? More than 1,000. So this report goes to this people who have registered with this Rehbar saying that they're interested in investing. And then the investors will, and it will also mention what is the minimum investment required in this particular case and what's the maximum investment that can be taken. And based on the interest expressed by the investors, Alhamdulillah, in most cases, the response has been that we get more people interested in investing than the amount that is needed. So based on who responds first, and there are certain other criteria that we give, based on that, the investors are selected and they are given the complete, we have an option for negotiation, but most of the time the negotiation doesn't happen. If it is a 1:1 investment, there could be a potential for negotiation. But if it is a many to one, it's very difficult to do a negotiation. So people normally just go with whatever is recommended by Rehbar as a profit percentage, which is going to be. So one of the things that will be mentioned in the report which is sent out is what percentage of profit will be shared with the investors. And obviously the profits can go up and down, so your actual money can go up and down, but the percentage of profit is prefixed based on the investment and based on the analysis that we have done in terms of how much effort is already put in by the investor, how much money has been up by the entrepreneur, how much money has been put in by the entrepreneur, what is the brand value, and so on and so forth. And then the contracts are prepared, and in the contracts, we make sure that it is compliant to Sharia, it's compliant to the Indian legal systems, it's vetted by, if it's a new form of contract, it is vetted by our Sharia board. If it's just a cut and paste from an old contract, then we don't go back to the Sharia board for that. We also get opinions from legal experts if there is again a change in the kind of contract that we are doing. And based on all this, finally the contract is signed between the business and each of the individual investors. So one more thing I forgot to mention, in the due diligence that is being done, we also check in terms of whether the business being done itself is halal or not. If there is some component in the business which makes it something which is not Sharia compliant, then obviously we don't do that particular business. Once the contract is signed, then the amount that is required for investment goes directly from the investors to the business. The investment amount does not come to Rehbar. So Rehbar is not, Rehbar does not take money and then invest in companies. The investment goes directly between the investor and the business. Rehbar, of course, takes a fee for doing all the due diligence and all the paperwork and so on. So Rehbar takes a fee, and that's how Rehbar runs, obviously. In addition to that, like Abdurrahim Saab said, it's not enough that we invest once and then keep our hands off. So we do a monthly monitoring of the business, and based on the monitoring, we calculate the profit on a monthly basis, and then the profit is we ensure that the profit is transferred from the business to the investor. In some cases, it will be the actual profit, but in some businesses, on a monthly basis, we cannot get an actual profit, so we do an estimated profit, and then it is adjusted at the end of 6 months or 1 year. We will calculate the actual profit, and then the adjustment is made accordingly. But whatever it is, there is a regular flow of money which goes from the business to the investor. In the unfortunate case of a loss, there will be no payment which is made, and the investment amount of the investor will be adjusted down by the loss, so that for subsequent profit calculations, it will be as if the investor has invested that much less money. So that's how what happens in this case. So what is it that Rehbar brings to the table, and why should people engage with Rehbar, either the business or the investors? Why can't anyone do it without having Rehbar? And obviously anyone can do it, provided you have certain core competencies. So the Rehbar core competence which Rehbar brings to the table is that it has a network of highly an experienced and professional team. It has got strategic tie-up with various institutions so that we can have expertise from them. It has got a strong business network which we leverage to find out more about this business. We see all kinds of businesses, and obviously the Rehbar team itself will not know about all these businesses. But then we have a network so that we can get someone who is in this business and then vet the claims made by the businessmen with those people who are running a similar business, so that we can validate the kind of data that we are getting and validate the kind of data that is being presented to us. We have an active network, investor network, like Mudassar said, about 1,000 plus investors at this point of time, and alhamdulillah, that's not an issue at this. Business analysis and deal structuring, analyzed more than 200 businesses so far. Based on the size of the business, size of the investment, and the kind of business, one or more of the following will be done. There will be a SWOT analysis done on the business. There will be an industry analysis done, not just on the business, but on the industry itself, where we fear that the businessman may be good, but the industry itself is of risk in the future, and it may be a bad decision to put money in this particular industry. So an industry analysis is done. Porter's 5-4 industry analysis is done. Risk analysis, comparison with peers, financial analysis is done. And the end, we come up with what we believe is a fair deal structure, which is fair to the entrepreneur and fair to the investor. Due diligence, a promoter background check, financial due diligence in terms of the capability of the whether this person already is in debt for various other things, does he have a lot of personal debt? We try to find out as much as possible these kind of information. A legal due diligence is done, feedback from industry peers, feedback from suppliers, feedback from clients, we have already mentioned that. And all this is done within the framework of the Sharia code and the Indian legal and investment code. So we try to make sure that we never cross the boundaries there. Control systems are put in place, a legal loan agreement vetted by corporate law professionals. We take security such as undated checks and property papers where we believe that there is a need for taking security from the entrepreneur. Obviously, the security will not be encashed unless there is a fraud. If there is a deliberate attempt of fraud from the businessman, then we go and try to enforce and make sure that we recover the money. If it's a business loss, obviously we don't do that, and the investor has to bear that business loss. In some cases, there will be strict terms of use of funds, and that will be administered through mechanisms such as joint accounts. So there will be joint accounts which are created, and money will come in and go out through the, with the signature of a Rehbar representative only. These are not done in all cases. These are done only in some special cases, wherever we feel there is a need. We try to offer a comprehensive solution, a long-term financing and investment partner to both the business and the investor. Provide an overall business consultancy, which is, again, like Abdurrahim Sab said, it is a need of the hour for most businesses, especially the small businesses in India. They don't understand basics of accounting. For them, the profit is whatever came in today minus whatever I spent is the profit. They don't really look at what additional charges are there, what could come in the future, what investments have I made in the past. None of those things are taken into account. So we try to instill that slowly. It is not easy. So we try to educate them slowly on these things, and then bring that professionalism into many of these businesses. We try to optimize the use of funds in the business. We try to tell them where to put the funds and how to put the funds. Again, this is not possible in 100% of the cases with the limited resources that we have. But wherever we feel there is a need, we try to do whatever we can. Hand-holding both parties from initiation to monitoring of this thing to the exit of the investment. This is the Rehbar team. I'm Sherif Kottapurath. We have Maulana Khalid Saifullah Rahmani, who is the chairman of Sharia board. And we take his advice whenever there is something slightly different from what we have done before, or if there is a doubt whether a particular whether a particular business is halal or not, we again go to him when we have a doubt and ask him, here is what the business is, this is the way we understand it. Is it okay to invest in this particular business or not? M.H. Katkade Saab, again probably the father of Islamic economics in India, Islamic investments. He is a director and a founding member of Rehbar. Dr. Sharik Nizar is again a director in Rehbar. Mr. Mohideen Ashfaq, also a director with about 15 years of entrepreneurial expertise, which he brings to the table. And Mudassar Baig is the executive director and CEO. We have Ashraf Mohammadi, who is the regional head of West India. We have Rashid, who is manager investments, and Gibran, manager operations. Now we are, alhamdulillah, starting our Tamil Nadu operations, and we have Ismail Seth, who is representing Rehbar for us in Tamil Nadu. We are looking at the possibility of setting up a proper branch in Tamil Nadu, just like the way we have it in Mumbai for the western region, and that basically will depend on the response and the interest shown by the people who have come today, and what we see, then we will decide how much to expand and how to do the Tamil Nadu operations, inshallah. And we would like to interact with you and then get your feedback on this before we take the next step. We also have an investment committee where, again, any large deals we vet through the investment committee to make sure that there are no gaping holes because of the lack of experience from our side, which happens. So Syed Shahabuddin is a trustee of the National Pension Scheme, is ex-MD of SBI Mutual Funds, more than 40 years of experience in this sector. So we go to him, and most of the time, whatever industry we touch is something which is already seen 4 or 5 of those beforehand, so he is able to give us a lot of advice on that. Ali Sherif is done his Masters in Development Management from London School of Economics, and he's a consultant with Deloitte. We have Ahsan Ali, who's again done his Masters from Arizona State University, and in the IT industry with more than 20 years of experience. So this is the Rehbar core team, which we have. And I would now request Mudassar to come and then go through the more technical parts of this presentation so that he can give you a better idea on that.
Right. Initially, when we thought of this idea of Rehbar as a platform which will connect the businesses with the investors, we always had this thing in mind that we need to make sure that we provide a very professional platform to the investors and the businesses. Now, I have been in this, alhamdulillah, it's been 3 years now since we have started Rehbar now. And one thing I'll tell you that this is a very difficult model. I have to be humble and honest about that. This is a difficult model. There are 10 things that can go wrong at any point of time. For example, as Abdurrahim Saab had rightly suggested, there are a lot of challenges and there are a lot of things we need to really look at. It is not just sufficient that we choose a particular deal and just execute it. Then you need to choose the right kind of deal. You need to be able to monitor it the right way. You need to make sure that the exit is also the right way. And I'm telling you, one thing goes wrong, any of these, the whole thing goes wrong. So it is a challenging model. It is a very challenging model. And hence, there is an even greater need that we make sure that the systems and processes in place are absolutely professional. Islam, through Quran, gives us guidance to what is right and what is wrong. So it talks about the ethical aspects. So yes, Sharia compliance to that extent is required. But then when it comes to professionalism, it has to be borrowed from the learnings which we have had from the conventional finance. And there is no we cannot have second thoughts about it. So this is something we have been very particular about, professionalism and Sharia compliance. As Professor Saab had said, perhaps these two would be seen as oxymoron sort of things, but then we are trying to actually get them together, inshallah. And hence we have been very cautious in doing the deals. We have seen more than 350 deals so far, and we have rejected almost 300 of them. So only when we are really sure that all the aspects which are required to choose a particular deal, apart from Sharia compliance, for example, you can see, so these are the reasons why the deals were rejected. If you look at it, if you look at it, only 12% of the deals were rejected because they were non-Sharia compliant, whereas there are so many other reasons why the other deals were rejected. If we feel that there will be a difficulty in monitoring the particular business, the deal will be rejected. 6% of the deals were rejected for that reason. High business uncertainty. We do not know how the business is going to perform going forward. We are not able to correctly project how the business is going to be going forward. Especially startups would fall under that category, for example. Startup, we don't really know. I mean, 9 out of 10 startups sort of fail. So any of these businesses where we feel that the business uncertainty is very high, we just reject a particular deal. Low promoter response. If we feel that the promoter is not very forthcoming. Again, this is sort of unlike, for example, a case where you give a bank loan and then you keep getting interest from it. This is a case where you invest in a particular business. There's a lot of interaction which goes with the particular promoter, not just at the time of execution, but also post execution of the deal. You need to interact with him every month. As Abdurrahim Saab said, you need to understand how the business is going. Are they doing things the right way? Are they going the wrong direction? If we feel that they're going the wrong direction, it is our responsibility to make sure that we kind of get them on the right track. Now, this is something, I'm not saying that we are doing justice with all those things. In fact, when Abdurrahim Saab was suggesting all those things, my heart rate doubled, thinking, are we really doing what we are supposed to do? It is a challenge, but yes, we have to do as much as possible, and we're trying to do that. So if we feel the promoter response is not going to be very strong, we reject the deal. 14% of the deals were rejected for that reason. Promoter background is weak. The most important thing any person in finance will be able to tell you, I'm sure all the learned speakers who have assembled here will be able to vouch on that. More than the business, what is important is the background of the promoter. If this is a promoter with a very strong background, by strong background, I mean background in terms of ethics and business acumen. If he has a very strong background, even if things are difficult, he falls in times which are sort of challenging, he will be able to find a way out of it. So that is something we give a lot of importance to. 16% of the deals were rejected because we felt that the promoter background was not very strong. If there's a history, for example, of any questionable transactions or a history of poor decision making, anything on those lines, we do not want a person who's too aggressive. We do not want too aggressive and doing 10 things and making errors in 9 things. That's not the sort of promoter we're looking at. We do not even want a promoter who is too passive and who's unable to grow, who's just happy with that little thing which he has. It has to be a good balance of everything. So all those things are taken into consideration. If the promoter background is really, really strong, only then we go forward with the particular deal. Business model, of course, if it is not feasible, deals are rejected for that reason. 17% deals were rejected for that reason. And then, of course, investment itself, if it is not feasible in particular cases, the deal gets rejected. So, alhamdulillah, overall, what I'm trying to say is there's a lot of emphasis which is laid on professionalism. It's not just Sharia compliance which you look at when you're working with deals in Rehbar. So this kind of shows you the trajectory of how Rehbar has been growing since inception. The numbers on the x-axis, that is the bottom, are the quarters, first, second, third quarter, that's every 3 months. So this is how we have been growing. Initially, if you can see, the bars are really, really small, which means we were very, very cautious about doing the deals. This was just an idea. In fact, when initially MH Khatkate, he's really the person who came up with this idea that this is something which can be done in India and this is something which is feasible. Initially, when he had suggested the model, I kept asking him, are you really sure this can be done? And I kept asking him, are you really sure it can be done? Because it almost seemed like impossible. You are giving money to a particular promoter, you're trusting that he'll share the profits with you on a monthly basis. Now, does that really happen?